Tesla has just released its third quarter earnings report for 2019, and as become the norm on this channel, we've poured over them, boiled off the stuff you don't need, and repackaged the rest in a super digestible format. Before I give you all of the important bits though, I would just like to note that Tesla's actually changed the way its quarterly figures are given. Instead of the letters that it previously produced, it's now made an almost Apple-esque slideshow with less jargon and more eye candy, like a section of charts and photos that makes Tesla's big picture a lot easier to envisage. If you haven't seen it yourself, you should totally check it out at Tesla's Investor Relations portal. I'll make sure there's a link below. To start, let's begin with production figures. During the quarter, Tesla made a total of 96,155 electric cars, split between 16,318 Model S and Model X and 79,837 Model 3s. And as we already know, Tesla achieved a total of 97,186 deliveries in the quarter, 79,703 of those being Tesla Model 3s. The rest, of course, being S and X. A much higher number of the cars delivered this quarter were leased compared to this time last year, but that's hardly surprising. Tesla has been encouraging customers to lease rather than buy, and with the Model 3 now the go-to for many people switching to an electric car, leasing is a smart move, especially if they're waiting for a Model Y down the road or an improved Model 3. In total, Tesla created just over $5.3 billion in automotive revenue from the sales and leasing of its cars, with a total profit of $1.22 billion from the same. This led to an automotive gross margin, essentially the difference between how much Tesla made the cars for versus how much it sold them for, of 22.8%. That's a welcome improvement to the 18.9% of last quarter, but not quite as good as the 25.8% of this time last year. While the number of cars that Tesla made and delivered are the biggest considerations for many fans and investors, there are of course other revenue streams for Tesla, which made $950 million through other businesses during the quarter. Of that, $402 million came from Tesla energy generation and storage products, while $548 million came from what Tesla calls services and other in its balance sheets. If you add in the cost of revenues to all of these figures, essentially how much it cost Tesla to make and sell the goods and services it sold during the quarter, you're left with a gross profit of $1.191 billion for the quarter. Again, this is up from last quarter, as Tesla has really settled into its stride with Model 3 production for now, but not quite as high as it was this time last year. Without the restructuring costs it's had for the previous 4 quarters, Tesla has now apparently completed that process. Tesla's operating expenses were noticeably lower than in recent quarters, reflecting a leaner, more efficient business operation. In total, Tesla spent $930 million on operations. That includes, I should note, about $334 million on research and development. It's about the same as last quarter. Which leads us to the figure most people are most likely to focus on, the profits. Unlike last quarter when Tesla made a loss, the company reported a profit of $143 million, that's 80 cents per share, using the GAAP accounting method, and $342 million, $1.91 per share, using the non-GAAP accounting method. For those unfamiliar with the difference, GAAP doesn't take into account all of the income that Tesla is due to earn but hasn't yet from things like vehicle and solar leasing, while the non-GAAP method does. Overall then, it has been a fantastic quarter financially for Tesla. It's broken records on both production and deliveries, and it's ended the quarter in the black. While Wall Street expected Tesla's revenues to be higher than they were, it also predicted a small loss for the quarter, and Tesla beating that expectation quite substantially will surely do great things to Tesla's shares tomorrow when Wall Street opens for the day. I should note, it's already skyrocketed in the hour or so of after-hours trading it's taking me from the release of these financials to me recording this video. But it's not just the figures that's likely to make Wall Street happy. Tesla announced in its financial report that things are going pretty splendidly for the company right now. Its Gigafactory 3 is ahead of schedule in Shanghai, China, and trial Model 3 production is already underway there. It's confirmed that yes, as we and other outlets have surmised recently, the Model Y is currently way ahead of production schedule, and Tesla is now promising us that we should see Model Y's launch by summer next year. The Tesla Semi is also progressing apace, and Tesla says it will produce limited volumes of the Class 8 big rig next year. Add in all the other things that Tesla has in the pipeline. Tesla deployed a record 477 megawatt hours of energy storage during Q3, and it's easy to see that Tesla is soon going to need more production facilities. Which is why Tesla confirmed in its quarterly report that it's getting ready to announce the location of a brand new European Gigafactory where it will produce European market Tesla Model 3s and Model Ys. We can expect an announcement on that very shortly, but as Europe's market for mid-size premium sedans is bigger than it is in the US and Canada, and second only to China in the world, building a European Gigafactory is a very smart move. And in case you were wondering, Tesla says it's also working on bringing new US production facilities online to build the Tesla Roadster, Tesla Semi, and yet to be revealed pickup. Fremont will for now remain the home for Model S, Model X, Model 3 and Y. Yes, Tesla's keeping Fremont sexy, so these new facilities will work on the other models that Tesla is planning to produce. As for vehicle software, well, Tesla says its V10 software update is now pushed to customers' cars and that its Autopilot functionality during the quarter registered one accident for every 4.34 million Autopilot miles driven. That's an accident rate nearly 9 times lower than the average in the US of one accident per 500,000 miles, even though Tesla's Autopilot is a semi-autonomous driver assistance feature. What else can I say? Well, I'm sure the earnings call, due to take place right now, will give us more information, but the message is clear. Tesla continues to defy the auto industry norm and seems to be headed towards a new chapter in its history, where it's ahead rather than behind schedule, its cash flow is positive, and it can bring that dream of transitioning the world to clean, renewable energy to a commercial reality. The biggest challenges forwards: making its products more affordable, tackling its service and parts backlog, which is something that Tesla is now working extremely hard on, as well as expanding its supercharger and destination charger networks even more than it previously had, as well as entering into new markets around the world. Making its own battery cells, something Tesla is most certainly doing, will certainly help lower overheads in the long term, so I'm hoping that that first part really is within reach. The Model 3 is a fantastic car, and I look forward to seeing it and the more practical Model Y drop substantially in price so that more people can afford them. Because if Tesla can do that, it really will change the world. That's it. Thanks for watching, and if you'd like to help us make more videos like this, please do like, comment and subscribe. Send us a couple of dollars our way every month through Patreon, support our coverage of the LA Auto Show, or feed our coffee habit with Ko-fi, or buy something from our swag store. I'll be back soon with more content for you all to enjoy, but until then, keep evolving.